Markets are trading cautiously heading into the North American session as investors balance still hawkish central bank expectations against easing inflation pressures in Europe while keeping one eye on geopolitical developments in the Middle East. U.S. equity futures are modestly lower after recent gains. Treasury yields remain elevated, and the U.S. dollar continues to draw support from expectations the Federal Reserve could still tighten policy again if incoming data remains firm. The focus now shifts to tomorrow's U.S. non-farm payrolls report and next week's CPI release, with the market still assigning roughly 1 in 3 odds of a July rate hike. Attention later today centers on the ECB Sintra policy panel, where Fed Chair Warsh joins ECB President Lagarde, Bank of England Governor Bailey, and Bank of Canada Governor Macklem. Investors will be watching closely for any change in Warsh's hawkish tone following June's FOMC meeting, although policymakers are widely expected to reiterate a data dependent approach ahead of the U.S. employment data. In Europe, softer than expected June inflation reinforced the view that the ECB can afford to pause through the summer, even as policymakers continue to warn that inflation risks remain. Eurozone manufacturing continues to expand modestly, while easing cost pressures offer some encouragement despite ongoing supply chain disruption tied to Middle East tensions. UK manufacturing also remained in expansion territory, although new orders growth softened. The Japanese yen remains under pressure as dollar yen extends to fresh multi-decade highs, with the wide Fed BOJ policy divergence continuing to dominate price action despite ongoing intervention warnings from Japanese officials. Meanwhile, reports that indirect U.S. Iran technical talks are underway in Doha have helped support hopes for further de escalation, although uncertainty surrounding the Strait of Hormuz continues to leave energy markets sensitive to fresh headlines. Looking ahead, the Sintra Central Bank panel, U.S. ISM manufacturing data, and labor market indicators will be the key events before tomorrow's pivotal non-farm payrolls report, which is likely to be the next major catalyst for the dollar, treasury yields, and broader risk sentiment. That's all for now.